Starbucks that came out. Starbucks also reported pretty good earnings, mainly in line. You had $1 earnings per share, expected was 95 cents, $9.28 billion in revenue, and that was essentially what was expected, $9.28 billion. So everything was pretty much in line except for the earnings per share came in a little bit on the hot side, so that helps it out as well. But let's look at the chart on SBUX and see what we got from a post-earnings reaction. So right here, not anything big. Initially it had a sell-off, but then it came right back up and kind of normalized the overall swings of the post-market trading. Going into it, you can see it was only down 0.31%. Now, with earnings out, it's down 1%. So it's not been what you would call a heavy sell-off. I was actually in the stock up until Thursday of last week. I went ahead and sold it when the market started acting all hokey. This is why I got out of the stock here. Originally, I got in because it was breaking out. That looked promising to me last week. And so it started to break out. Looked like it had the momentum on its side, and then it just gave it all up. And then at this point, we're getting this double bottom basing pattern failed to hold the breakout, and it starts to drift lower. That was a no-go for me. It breaks below the 200-day moving average. Didn't like that as well because it had shown that level to be some support in recent days. This white line right here, that's the 200-day. So enough reason for me to go ahead and get out. Hasn't done anything since. In fact, it's trading lower than where I got out of it now with the earnings that just came out. Also, a reason why I got out of it is I don't want to hold the stock through earnings. I don't care if it's Starbucks, Walmart, or if it's AMD or some other stock that might have a lot of volatility. Trying to hold a stock through earnings puts a lot of risk on the table that you don't need to take on. So if Starbucks was to turn things around and start to break back up to the upside, maybe it gets up to like 102.60 or so, that would provide a possible opportunity to get back long on the stock and maybe have it with a good stop loss. But right now, it's trading below this resistance level. It's also got some support that goes all the way back here. It goes all the way back to December of last year. That has held up pretty well. You only had this one little outlier here that happened in early July where it broke below, but within 2 days, it was back above it with vengeance. So you got support below, you got resistance above. It's essentially stuck in a sideways trading pattern until it can resolve the support resistance issue here that it's stuck between. It needs to break back above that 102.60 and preferably needs to get into the upper 103s to really get excited about this stock again.